Hi everyone, and welcome to What the Field, the podcast where we unearth how we grow our food and how we might do it better. So today's guest is Alessia Lenders, Head of Impact at SLM Partners, one of the pioneers in using investment capital to scale up regenerative agriculture and forestry. So in this episode, we'll unpack more of the economic logic behind regenerative agriculture and explore how ecosystems and healthy soils and smart land use can create better food systems and real returns for investors. So before we get into all of this, Alessia, thank you so much for joining us today.
Thank you. It's great to be here.
So why don't we start with a little introduction, and you can tell us a bit about who you are and what it is exactly that you do at SLM.
Yeah, absolutely. Thank you for the introduction. So, just for a little quick background on myself. So, actually started my career in more traditional finance and investment management. So, I'm one of the few people at SLM that doesn't have an agronomical background. But really quickly in my career, I wanted to focus on investment solutions that were addressing climate problems. So, looking at solutions that were addressing the energy transition, waste, water. But the theme that I was most interested in was biodiversity. And so it was sort of really difficult to find financial products that were having a direct impact on biodiversity. And I kept digging, and what came into focus really for me was agriculture for sort of two reasons. Firstly, because agriculture, as it's currently being done today in most of the developed world, is causing a lot of harm, environmental harm to biodiversity, and a factor in climate change, but also because we will always need to grow food and have land that is productive. And so there's a lot of opportunity there to transition towards a better system. So that's how I started learning about everything that's possible with regenerative agriculture, and specifically what SLM Partners does. So I've been with SLM now for close to 4 years, and SLM stands for Sustainable Land Management. So ever since we were founded back in 2009, the focus has always been on scaling up more ecological regenerative systems and keeping the land productive. And so we've grown quite well in the past few years. We now manage $760 million. And our clients range from pension funds, insurance companies, to family offices, large and small. And we invest in farmland and forestland across the United States, Australia, and Europe. And so we're active in a range of different types of land uses, row crops, specialty crops, including tree crops, livestock, and forestry. And I'm based in Portugal, where we do a lot of tree nuts and olives.
So the area where SLM works is it global, or is it mostly Europe? Where do you work?
Yeah, so we're really focused on developed countries. So our biggest geographies in terms of assets is the US. And then in terms of land, it's Australia. And Europe is our smallest geography, but growing. So we started investing in 2021 in Spain and Portugal for agriculture. And we started investing in forestry in Ireland in 2018.
And my biggest question to you, Alessia, and I'm going to start with this one, is we hear a lot that there's no money in agriculture. We see producers complaining a lot that the land doesn't give any money. And then we see a lot of conventional farming followers saying that regenerative agriculture is actually not financially sustainable. What is SLM seeing in regenerative agriculture and in land investment to focus on that? Where's the money coming from?
Yeah, so this is what we have to spend most of our time on, right? Is convincing investors that there's a strong case here to invest your money in a way that can generate an impact, but that is also financially viable and attractive. And as I said, we work with very different clients, and we have clients that are very impact focused, and they're here because they want to support bigger adoption of regenerative agriculture across the geographies where we are. But we also work with investors that are a little bit more on the traditional side of things, and they really care about generating market rate returns. And even in that camp, what we do is quite attractive because we are real assets investors. So we invest in land. In a way, it's quite a safe, tangible asset. You have to be sort of long-term and patient capital, but it's quite an attractive asset class. And it's also very decorrelated from everything else that these big investors are invested in. So equity market, bond markets, farmland is very different and will be following sort of different commodity cycles, etc., that investors are not usually that exposed to. So they like the diversification that farmland offers. And then we come in offering something quite different to maybe the more traditional farmland asset managers because of the regenerative systems that we're putting on the ground. So, for example, in the US, over 90% of the farmland that we own is organic certified. And that means that it's quite a different type of asset, and we're exposed to the organic markets, whereas maybe through a more traditional farmland manager, you won't get that exposure.
Okay, so how maybe through a specific case, could you tell us how this works? So I understand you buy this land, and what happens then?
Yeah. So the number one thing to mention about our approach is that it's sort of farmer first. So we are really picky about how the land is being managed because we want to implement these regenerative practices on the land. And ultimately, the most important factor in this is the farmer that we're working with on the ground. So the first step is always to find a farmer that is skilled and experienced and that wants and is willing to grow. And usually we work with farmers who are keen to expand their operation on more land, but they don't necessarily have the capital. And we will come in as the capital provider to buy land. Take an example, we will find an organic farmer that already has been farming organically on their family farm for quite some time. And then they hear of a distant uncle that is retiring and it's a piece of land that they would love to farm, but they don't necessarily have the capital to buy it and start farming it. We will come in and buy the piece of land and put it under their management.
Okay, super interesting. So there's no need actually to train this farmer because they've already proved that their practices are following what you're looking for, right?
It's a little bit more complicated than that because every farmer has a different starting point. And we will work with farmers that have very different strengths and weaknesses. So yes, usually we always work with farmers that are experienced, but then some are much stronger at soil health practices than others. And so there's areas of improvement. Yeah.
And just very quickly, what are the opportunities for the farmer to then become a landowner as well? Because I'm assuming some farmers probably want to then own the land that they've been managing, right? Is that a possibility?
It depends on the farmer. So I think, as I mentioned, a few of the farmers that we work with already have their own family farm that they manage. Some other groups that we work with are more focused on owning the processing capabilities. So the factory, for example, to process the almonds rather than be in land, which is quite capital intensive. And so, as I mentioned at the beginning, like we work with large pension funds and insurance companies who want to own the land. So that's a key factor of what we're offering. And some like after 10, 15 years, it depends on the financial structures that we have, we will put that land back for sale. And if the farmer is in a position to buy it, then they're able to as well. But I think what's important in our financial agreement with the farmer is that we want to make sure that the financial incentives are linked to the realities on the ground of doing this regenerative transition and making sure that they have skin in the game, that they're taking risks, but we're there taking risks with them. So to give you an example, when we work with organic farmers in the US and we will buy the land and lease it to them, because we're asking them in the lease to go organic, and we understand that there's a bit of a J curve where sort of yields come down a little bit in the first few years, we accept a lower rent payment at the beginning and then get compensated for that through a profit share later, but only once the farm is up and running and profitable.
I guess what I was saying at the beginning, like on the transition and the difference between what we hear from farmers or from conventional farmers and the interest we see in funds like SLM, is kind of the long term vision versus the short term vision, right? A farmer needs to, like, it's focused on the next harvest, and what you have in your approach is that it's not so much about the next harvest or the weather, how the weather is affecting the next harvest. Is much more on kind of the value of the land in the long term, right?
Yeah, we're very much positioning ourselves as a long-term partner for these farmers. And in the US, for example, we offer 10-year leases, which is quite unusual to what's more common is 1 or 2 year leases. And having this long-term approach is actually great for us because it attracts a lot of young farmers. So who want to be investing in the long term, but they need sort of a financial partner that has that same vision.
So if you're working with like 10-year leases, for example, what happens after those 10 years? You said you then put the land back on the market?
Yeah, so our investors will expect their capital back at the end of the fund cycle.
Okay. And so then how do you
it depends on the structures. If when we set it up as a fund, they will expect it will be quite fixed in 10 years time. But we also work in more flexible structures where it's up to the client to kind of decide when they want to sell.
Okay, yeah, okay. And so say you've been applying your regenerative practices for 10 years, how do you guarantee that then, those will be kept even longer term, or do you not really go that far into the future?
Yeah, no, it's something we think about a lot, and it's a risk that we take. And the way we approach it is that we are trying to do everything that we can to make sure that we're putting in place a system that is economically viable and even attractive, and so that it makes sense for people to continue it over time. So that's really our challenge, is to put something in place that works so well, that is already kind of building soil health, but that is also generating good income, that is proving to be more resilient to climate change risks, and that hopefully we'll find somebody that values what we've put in place to continue it through time. There's also the option that whoever buys it next wants to keep the same farmer on the land, but we don't have a lot of control over that.
I guess that what you're doing is kind of taking that risk during that initial transition period of, well, pretty long transition period for what we're seeing of 10 years, proving that the business case makes sense, and then hoping the best for that land, that someone that takes over is going to see that actually having better soil health is going to improve resilience and even have really strong yields, and maintain it that way, right?
Yeah, exactly. And sort of we're going through the most difficult years, right? So hopefully that then helps more people come on board.
And from what you're seeing is investing in that land for those 10 years, is the price of the land is increasing just because of market trends, or is it actually improving because of the practices you've been doing for those 10 years?
So for now, what we haven't seen the latter of what you said, but I will say the one thing that we've seen impact land valuations a lot is water, access to water. And that is, of course, a very important part of what we do, both in terms of the due diligence when we choose which land to buy, but also once we have acquired land and we're implementing soil health practices that has a big impact on water, or we're thinking about how to manage water on the land. That's really important.
Super. So the way it works with the farmer, then it's they lease you lease the land to them, right? And the profits from the harvest go to them, right? Because they're
so that's what we do in the US, but we have different models in different places in the world.
Okay.
In Australia, The ranchers that we work with are actually SLM employees, so it's fully integrated. We also have a joint venture with a group in Australia that's called Impact Ag Partners, who manage the farms and are experts in setting up carbon projects as well on regenerative farmland. And in Iberia, where I work more closely, we have another type of financial arrangement, which is we don't lease the land to the operators we work with, but we have a management agreement in place where we are. So in this case, our investors are more exposed to the crop risk and the commodity cycles because we're much more involved in the risks of growing the crop year on year and the revenue and the costs associated with the farming business.
And so, for the investors, how do you convince them that these risks are all worth it? Like, how, because it's obviously something quite new, there aren't that many results yet, maybe, of all of the benefits that can come out of this. Do you find that it's difficult to sometimes get investors on board for this kind of investment in regenerative agriculture?
I'd say that there's a few. Every investor is quite different, and there are investors out there that are very experienced in farmland investing and they understand the risks very well and the opportunities. They know exactly which crops they want to be exposed to, which regions, and we work with a few of those. As I said at the beginning, like one of the things that differentiates us is that we're offering them exposure to maybe organic markets, and they like that as a diversification to everything else that they're doing in farmland investing. But then we also work with impact investors who really want to get more out of their investments than just financial returns. And they're expecting to see tangible results when it comes to improvement in soil health, in biodiversity, in carbon sequestration. So we do a lot of work to measure and report on everything else that's going on the farm. And we really believe that it's quite unique to find a financial product that can offer returns, but also real tangible impact on nature.
And do you guys take care of that whole part of the monitoring of the like soil health measurements and that type of thing that all falls under your kind of responsibility?
Yeah, we do a lot of work on that. We work with the operators to collect as much information as possible. We have an impact report that comes out every year and follows the TNFD disclosure recommendations, so the Task Force for Nature Financial Disclosure. And it's really about being as transparent as possible. But then I guess what's more important is that we have very specific sustainability targets for each of the strategies. And that can be percentage of land converted to organic, but it can also be a lot more technical around how we want to see soil health change, and the amount of hedgerows that we want to plant on the farm and following that. And the investors really want to see that change over time. And they also like to come and visit the farms to see how they're changing through time.
Oh, that's cool.
So the two questions we get a lot from, I guess, especially financial background people or even funds, it's numbers behind regenerative agriculture, and it's many times not specifically related to kind of biodiversity or water. It's more two questions. It's how much does it cost per hectare to do a transition to regenerative agriculture, and how much carbon is stored in the soil per hectare. Is this questions you're getting from your investors too, and how do you respond to this?
So yeah, we get a lot of questions on the cost of the transition is something that is very different for every different context. And as I said, we're working in very different geographies and very different crops. So even the conversion process is something very different. When you're talking about a grain farm, it's a little bit more. It's actually there's more literature and more data on what it means to start doing cover crops and increasing the rotations than, for example, in tree crops. Like we bumped into this problem as we started investing in Spain and Portugal in almond trees, pistachio, olives. the literature around what it means to manage these tree farms regeneratively is sort of more nascent. And so we had to work with a consultant, and it's hard to find a perfect example that we can replicate. We're kind of creating it ourselves, and it's up to us to map out the costs and decide how much costs we can take on early and how much we have to sort of wait a little bit until the farm is producing more revenues. And that's really sort of the key of what we're offering, is managing this transition, managing these costs in a way that doesn't burden the farm too much. And it's a constant balancing act between doing as much as we can while also prioritizing the economics of the farm. So it's really kind of our sauce, and it's where our the members of the team really sort of shine, is in doing these compromises.
And on the carbon one?
Yeah, so we do a lot of work to measure carbon, and we have to use models, unfortunately. And there's a lot of soil carbon models out there that we can use. So we input all the practices that are happening, and then that will estimate how much soil is stored. And that, again, really depends on the context, because the soils in Spain will store a very different amount of carbon, and the potential is also quite different to a grassland property in Australia. But we bring this in the conversation as much as possible, not necessarily because carbon is the ultimate objective, but more because it's a good summary number to show what's going on. Because on these farms where we're doing a regenerative transitions, we're doing two things. We're reducing fossil fuel inputs because we want to be reducing the chemicals and the synthetic fertilizer, and we're also wanting to maximize photosynthesis, have more trees, have more hedgerows, and have more living biomass on the land as much as possible. And so both of these things are reflected in the carbon number. So the carbon number is not necessarily a pure target for the investors, but it's a good summary number to explain what's going on the farms and how things are changing.
Do you use these carbon calculations for some kind of market, or it's just an indicator of the transition?
Yeah, so we haven't used soil carbon for any market yet, but we are working on it. I would say the difficulty is that in a lot of geographies, carbon credits generated from land are still in they're voluntary markets. But the one place that we operate that has a compliance market is Australia. So the Australian government has approved methodologies for generating carbon projects on agricultural land. And we've been able to tap into this. We started on our grassland properties, and we've sold more than 1.8 million credits. And we are going to do more. And they also now have a methodology for soil carbon that's government approved. And so we will start implementing that on the new farms that we just bought.
And how do you see kind of the future of these markets? Because it's said many times that it's not really like you cannot trust it for the long term. It depends on the practices. It depends on the climate. And I guess it's not like super well established, at least here in Europe. Maybe in Australia it already is.
Yeah.
Yeah.
No, but I think this is why we really like working on this in Australia, where it's regulated, because the fact that it's regulated means that the methodologies have been vetted. They've been reviewed by the scientists and the government. Sometimes they're not perfect, but at least they've been established as the standard, and everybody can agree this is the way to do it. And also there's demand that is regulated by the government. So the companies have to buy carbon credits. So I think that helps create something that is more stable. And we have seen it benefit our business model very much in the farms that we own in Australia. But to give you an example, on some of these grassland properties, we had to go through really long periods of drought. And so we had to reduce the amount of cattle that were on the land, and that reduces the revenues of a lot. But thanks to the carbon projects that are long-term and providing cash flow on a year-to-year basis, because it was a way of diversifying the revenue streams and of creating a business that was more resilient in these times of drought. So I think for us, the model in Australia has been really successful, and we're really keen to see Europe follow. And there is a lot of work going on right now in the European Parliament to establish a compliance and sort of regulated market for land use. And we're keeping a close eye on that because that will be great if it kicks off.
When do you think this will be happening in Europe?
Will probably take at least 3 years, I think.
How do you said at the beginning that biodiversity was like really a high interest for you. How do you do you take it into account now in your calculations, and how do you make people see it as more of a very important outcome and not just like a nice to have of having more animals and more birds in your land? So how is this like, because we see carbon being more and more integrated kind of with the financial conversations, but not so much biodiversity.
Yeah, and I think this is where farmland as an asset class really stands out. And I would say we're seeing more and more investors that have kind of a similar journey to what I did. They decide beforehand that actually we need something that addresses nature and biodiversity. And then they're looking at their private equity options, their venture capital options, and they're struggling to find something that has a direct impact on nature, and they discover farmland as a new asset class that they maybe didn't invest before. And we work with a few impact investors that have come to us through this journey of really coming to farmland because of the opportunity of having a direct impact on nature. And I think it's twofold, right? Because you have an impact in kind of reducing the harms, because pesticide usage and chemical usage on farm is the number one reason for the insect collapse that we're seeing across Europe and sort of where industrial farming is. But then on the other side, you also can take positive actions. And we work with ecologists to monitor the changes that we're implementing on the ground and sort of showcase those to the investors, how it's changing. So coming back to that example in Australia, we were working with a grassland ecologist that was coming to the farm. She started coming in 2014. She came for sort of more than 10 years. And she was able to monitor how the ecosystem changed over time. We were implementing a regenerative grazing system where the way we moved the cattle around was quite more complicated and thoughtful than what's sort of the more general way of managing cattle in the area. And she was really astounded by how quickly things changed, and the quality of the grasses that were growing.
That's super cool. But so do you guys work with like a lot of third party people, kind of like this example where you get like specialists or agronomists who go on the ground and who deal with that stuff? And how do you kind of organize that? Is it very localized, and how strict is it? Like, how do you choose who you can work with as third party people?
Yeah, we always like to work with people that really understand the local context. And so we will find ecologists that are, in the area and understand the farming context and the wider landscape of that area. So we have different groups for every area where we are. And then we also have different specialties. So just to give you an example, in Portugal and Spain, the work that I'm closest to, we work with ecologists. They're mainly biologists that help us understand the value of the natural areas around the farms and the hedgerow plantings, all of that. But then we also worked with a consultant that was more on the agronomical side and helping us think about soil health, how to sort of manage tree health as well, and sort of the more technical agronomical stuff. Then we also work with a soil microbiology company that is helping us get data on what's going on underground and seeing how we can feed that. And then we were also working with a carbon expert. So there's a lot of different expertise coming to the table. And then we put it all together and make sure that it's useful for the farm management and for the investors.
Have you had any examples where you've done a project like this and it hasn't worked out, like where that transition actually didn't prove to be fruitful or have any progress? And how do you kind of deal with that when sometimes regenerative agriculture doesn't work out with the same results that you expected?
Yeah, I mean, I think there's the cases where we're working towards going organic, and I think that's simpler, and it's not often that it doesn't work out. And then the cases where we don't have a target of going organic, but it's a little bit of a more complicated target because we're transitioning the land to regenerative agriculture, and we'll have more technical sub targets on to sort of define that plan and how it looks like. And I don't think we're at a point yet where we can say anything has failed, but things can take longer than we expected, and climate can get in the way. If there's a drought, then things will slow down. We can spend money on planting cover crops in between the almond trees in Spain, for example, but it doesn't rain, so nothing grows, and we'll have to spend money again to plant it. So those are things that can sort of delay the plan, but we account for that since the beginning. We know that there are always things that will get in the way and that it's a journey. And, one of your questions was like, so all these farmers know exactly what it means to be regen. Well, everybody is sort of discovering what it means in their specific context and how far we can go. So it's a journey for all of them and for us as well.
Yeah, regarding knowing what regenerative actually is and this transition journey, I normally don't ask this question anymore because we've heard a lot of opinions and many people are more focused in one or the other. But given how much importance I see in your speech in organic and regenerative, what is the difference you see between the both of them, and how do you separate them?
Yeah, I guess we see organic as being a clear certification, kind of a verification tool. And as you know, organic is a very simple set of rules that is not always easy to implement, right? Sort of no chemical pesticides and no chemical fertilizers. Whereas we believe that regenerative principles, which are not a set of strict rules and can be very much adapted to different farming contexts, are more scalable and we can get more people around the table. And in fact, we started with a big focus on organic, but the more we grow, the more we are happy to explore going into regions where organic is difficult, but we still have a lot of conviction that there's a lot that can change and that a regenerative transition is real and delivering tangible results, even though we can't showcase them with a simple certification of this is organic. And we are keeping a close eye on regenerative certifications out there, but it's still, I think, a little bit difficult to choose because there are many and it's hard to tell which one will be sort of the gold standard. I don't know if you work with any farmers that use regenerative certifications.
We do work with some of farmers that have the ROC, regenerative organic certification, but just like accidentally. It's not something we demand to prove that they're regenerative. In fact, the way we have chosen to approach it is yes, for organic, like it's the certification, as you said, and it's a set of rules. And for regenerative, we trust a series of outcomes that we apply to all of the farmers that work under our program of regenerative agriculture. So one is focused on certification, the other one is focused on outcomes. And this is the main way in which we separate both of them, yeah. And do you ever get involved in marketing the end produce or not at all?
No, we don't. So, well, I guess we choose farmers that have market outlets, but we don't get involved in that stage. We're very much focused on the land asset, but it's a clear consideration for us when we're building our investment case, is to include in the economic modeling what price we can get depending on the kind of market outlets that the farmer has access to. So if they're able to sort of decommoditize their product either through certifications or by working with direct to consumer platforms like crowd farming, that is definitely something we will include in the economic model, and help us in making the case. Yeah.
And how difficult is it to find these farmers if they're actually discovering what regenerative agriculture is? How difficult is it? Because we see there's not so many examples of farmers that
Highly
are
productive farmers as well.
That are regenerative.
yeah that are regenerative, that are willing to expand their management to more land. I guess it's not easy to find kind of it's like hiring someone for the very long time, like
Yeah. But I guess that's sort of really where our value add is, and it helps a lot that we've been around for so long, and we've been talking about ecological farming as being a good business model for a really long time. One of our founders, Paul McMahon, he's been writing about this for a long time, and so it really helps in building the network within these farming communities and recognizing that we are a good partner for them, having sort of this long-term and authentic approach.
okay, so that's for them trusting you, but how do
Yeah.
you find the right farmer to trust?
Meeting as many as possible. Yeah.
Yeah, I guess it's like a really long and profound selection process for someone to
Yeah.
work with, because it's strong partnership.
And in fact, our team is spread out across the geographies where we work to be really embedded in those local markets.
You must have a team like similar. We have a team at crowd farming called the Farmer Hunters who go out and basically hunt farmers.
Yeah, exactly.
And do you ever work with farmers who are actually coming from way more conventional or industrial practices, but who are kind of like curious and interested in going on a more regenerative journey, but who don't have anything yet to prove like that they like maybe they don't have all of the education yet, or maybe they don't have any clear examples that they've been able to manage land in these practices? Do you also kind of bet on farmers' good intentions before they've proven anything, or is that a bit too risky?
As long as they agree to being closely monitored, absolutely. And we haven't done it a lot yet, but we have done it in Portugal, and we actually see that there's quite a great impact story there, because for example, this producer in particular, we're working on a semi small plot of land, sort of 150 hectares, whereas they separately manage more than 600. And so, if on the plot that we're managing together, they can get more comfortable with these practices, see the value of them, then they will be able to implement them on a much bigger scale. And so it's a different type of impact, but I think it can be quite powerful, and it's part of changing mindset and giving them the financial flexibility and the partner that they need to try new things.
Alessia, and I was wondering, how do you, because I guess you work a lot, as you've said, with kind of targets and modeling outcomes, and how do you involve kind of climate extremes that we're seeing more and more in those models? It's something you take into account, like, yeah.
Yeah, so we'll do scenarios, worst case, best case,
Okay.
and I think what we have to stress test the most is the water. We do a lot of work on that to understand how long-term drought will impact the water security of the properties, especially in Spain and Portugal, where we work with a lot of irrigated crops, and so we'll need secure water source. We've worked with a satellite imagery company to help us with that. They're based in Barcelona, called Lobelia Earth, to model the different level of the reservoirs that were linked to the property under different climate scenarios to assess the risks. And yeah, I mean, it's a risk that we have to spend a lot of energy and resources to understand well, but ultimately it's a risk that's there, and we have to find ways to manage it and get comfortable with it in places where we think it's worth taking the risk.
And so it's kind of cool that you guys do so much work of like data collection and risk analysis and all of this. Do you use that information and all the data that you collect for other things aside from like with your investors? Do you collaborate with more like research institutes or governments to kind of make the data public, or like have a different use for all of the data and all of the research that you've accumulated?
Yeah, that's a good question. Well, we have a few projects in the work in Spain and Portugal, but I can't talk about them yet. I will just say in Spain, we work really closely with Regeneration Academy. I don't know if you're familiar with them, because one of our operators in Spain is Alfonso Chico de Guzman, and his wife runs Regeneration Academy. And so that means that we're hosting sort of over 10 students a year on one of the farms that we have. And so that's directly supporting university projects that are using the farm to do trials and collect data and study the regenerative transition and what it means from different angles. Every student comes with sort of a different aspect that they want to study. But then I will also mention in Ireland, we do something that's philosophically very similar to a regenerative transition, where we transition forests, well, they're plantations, to a close to nature forestry management system. And we're one of the very early sort of big institutional players in this space. And so with the European Investment Bank, they gave us a technical assistant facility grant to do a lot of research on building out the tools, the carbon models, the biodiversity monitoring tools. These are tools that are going to be publicly available that will help more foresters adopt this close to nature forestry system.
That's an amazing approach. And you were talking before about grasslands. It's livestock something you directly jumped in, or is it something you had kind of some internal debate on? Is this something we should get into, or is it something unsustainable that we will not approach?
Yeah, so actually our Australian livestock fund is the first fund SLM ever launched. So
Okay.
it was the first one that we launched in 2012. And just little parenthesis, right? We don't do any conventional feedlot systems.
Okay.
But we really believe in the value of livestock when it's managed regeneratively. The cattle are outdoors, and they can be really managed in a way that regenerates the landscape. And we follow the principles of Alan Savory,
Okay.
who has been doing this in Africa. Even on the farms, for example, the farm I was speaking about in Spain, managed with Alfonso, we really see value in integrating livestock because it's a great natural way of managing the weeds and of providing fertility. So instead of having to put herbicide or mowing, the sheep are in the almond orchard to remove the grasses when we need to make room sort of to collect the almonds, and they're fertilizing the soil with their manure. So whenever we can, we like to integrate animals.
Super. And I think just because we're running out of time, my last question, could you share some like 2 or 3 data points of proving that regenerative agriculture is a business case that makes sense from your experience of a specific case or of your research, to convince people that this is actually not something like super niche and super boutique that works with small farms, but that it actually makes sense in the long term and it's profitable?
Yeah, so I guess we wrote a whole paper on this. And we sort of, because it's been over 10 years that we are investing in this way, we took it as an opportunity also not just to showcase academic research papers that are showcasing the value of regenerative transitions, and there's a lot of data points in this white paper. I don't know if you can link it to the podcast,
Yeah.
but that study an almond orchard, conventional almond orchard versus a regenerative almond orchard, and the reduction in costs and the higher profitability that you can achieve. But we put all of these research papers in the white paper, but we also wanted to showcase sort of our lessons learned of what we think worked and didn't work in doing this for more than 10 years. And again, it depends on the system and the regions, but overall we think that thanks to this regenerative transition where we're reducing costs and we are able to sell our products at higher prices. We're able to tap into carbon credit markets, and we're able to build a business model that's more resilient. This can add about 1 to 3% to the IRR of our projects rather than sort of the conventional counterpart.
Convinced?
Yeah, I was already, but yeah, even further.
Perfect. And so just to close off, Alessia, on our last two little questions, is there a moment since you've been working in this space that you've had like a eye-opening realization, or kind of like a moment where you've been like, oh, what the fuck? How is this happening? Or what's going on? Like a very surprising thing that you noticed since you started working in these projects?
Yeah, I guess the thing that I love the most is when I discovered how different a farm looks depending on who I'm with. So when I'm with the biologists, the way we walk around, the what we look at is completely different to when I'm with the farmer, and it's completely different to when I'm with the water expert, for example. And I really loved it when we were walking around one of the farms with a water expert and just following how the water moves across the landscape. And we could see it, like whether it was eroding a channel or whether actually we could see where it passed because grasses were growing, but just in that area. And it's just crazy how it's kind of like putting on different glasses every time I'm there with somebody else.
That's super cool, actually.
Yeah.
I would love to go with a water expert. I feel like that's kind of the most interesting way of looking at land. And is there also, last question now, like a book or a film or a podcast or a research paper that you think everybody should read or watch that you would recommend to our listeners?
There's so much out there. I mean, I think it's, one of the things that I've really liked actually doing is it's a bit different, but the Oxford Real Farming Conference is available online and anybody can listen to it. And it happens in January every year, and it has some really great content, amazing speakers, and it's very focused on organic farming. But yeah, it's great. Highly recommend it.
Oh, awesome. So you would recommend like watching the talks from the...
Yeah.
That's, I think, the first time we've had one of those recommendations.
Yeah.
Awesome. Well, thank you so much, Alessia. I think this has been a really interesting conversation. It's a topic that we talk about a little bit. I mean, like, obviously we talk about it a lot, but on the podcast we never dove this deep into like the financial side of regenerative agriculture. So for me, it's been super interesting. Thank you for taking the time.
Thank you so much, Alessia.
Thank you.